All right, everything looking good. We are live. Let's go ahead and get this stream started. Somebody let me know in the chat. Everything's coming through loud and clear. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. Eastern Standard Time on 11/23/2022. And as always, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so let's jump right in here. Happy Thanksgiving to everybody out there who celebrates. Obviously, had a decent little week in the markets. Typically do see a little bullishness with the holidays, especially when we're in a bull market. We see everybody kind of, talking their books. Obviously, when a lot of stuff's down, see a little bit less of that. Obviously, nobody's talking about crypto this year. But let's go ahead and jump right in and take a look at what's going on here. So the most important theme, as we've been discussing literally for years at this point in time, but especially as of late, is what's happening with TNX and DXY. And basically, as long as they are pulling back, as long as they are bearish or retracing or transitioning into a bear market, however you want to look at it, as long as that's happening, it takes pressure off of other markets. Now, doesn't mean the markets have to go up, because we see with crypto, it's still getting wrecked. But it allows the opportunity for sustained rallies. And that's what we've been discussing for some time. So obviously now we have had a nice bull run up here. Basically got the cross back and broke out of the last retracement in August. Since then, had a nice run up. We crossed into the bear market or correction, or however you want to call it. A bearish retrace of the 821 on the daily. So once a bear cross takes place, we're in the middle of a correction, potentially down to the previous high, potentially down to the 200 exponential and simple, etc. But right now we have cleared the 236, we back tested, and it seems more likely than not we're going to come down here to the 382. We're going to come down here to that previous support, and then we can reevaluate. Now that's at about 3.5. Not likely we're going to go much lower than that, but for now at least. So that's our next target to downside. Now as that's taking place, it's important also for us to look at the DXY. Now, DXY hit our target. It came all the way down here to our Fibonacci's, to the 200 exponential. And it's literally, a couple, it's like 0.5, 0.5% off of the 200 simple. So, at this point in time, another little push down here to the same low of that wick, and we hit our target. So obviously we've been in a nice bull run this whole way up. We had a beautiful support line right here. We're above the 200s. And then, throughout the bull market, we didn't come anywhere near the 200. Now we have retested the 200 on the daily. So typically what happens is we're going to buy the retest the first time we come down to it, and then we're going to see what happens. If we come up here and then we start to roll over and put in a lower high, we don't want to be participating in that, because, likely we're going to put in a lower low after that and continue to the downside. And if we do continue to the downside, we're talking about somewhere around 100 to like 97, somewhere in that range, depending on, how we're looking at it. But when we look out at the longer term time frames and we just look at, here's our weekly. So again, parabolic rise to the upside, flip the 200 exponential and simple bullish, cross the 200 exponential above the 200 simple, and then we begin a retracement. Not uncommon at all. We break through resistance, we back test resistance to see if it's support. Do we get all the way down here to 98? We don't know. Might get front run. The sooner we move back to the upside, the more bullish it is. If we don't ever move back to the upside, obviously, the more bearish it is. But we do see now the slope line has flipped over red on the weekly. We had the hard sell. We left the bullish control zone. We're about to get the 821 bear cross, likely coming down here to retest the 200s. Now, when we retest the 200s, though, again, in a bull market, which we confirmed into the bull market when both these slopes flip blue, especially when the 821 cross. When we come down here, we would expect to buy that area if and when we get down that low. And then finally on the monthly, this is our first retest of the 8. Basically we kind of touched it right here, and then we essentially had like 6 to 8 months without touching it. So now we're retouching it. If we continue weakness, we would expect to come down to 21. That puts us right around that 100 level. So we basically, to me, it looks like we're back testing the same support. It held the first time we broke above it, and then we saw continuation. It looks like we're going to come down here to that level. We could front run it, we could overshoot it, but what happens when we get to that 100 level, it's going to be very, very important. We're seeing our first red histogram on the monthly. We're still in the bullish control zone. We don't have a hard sell signal or anything yet, but it could get triggered very, very quickly. Now, again, I'm still macro very bullish on this. On the monthly, the 200 exponentials above the 200 simple, they're both blue, but this could be, a decent pullback. We could see a pullback, another, what amounts to 5% or so, back down to 98 or 100 or something. There's quite a bit of confluence right there. Things don't just go straight up. So it's not crazy to think, the last time we saw this similar situation here was basically 2015. We entered into the bullish control zone. We get the hard sell signal. We exit the bullish control zone. We're talking about the difference between January of 2015 and February of 2016. So about a year in the bullish control zone. And then we essentially see a correction, which actually gives us a new cycle high right here, and then continues on into the bearish control zone from then. So we leave the bullish control zone in March of 2016. We enter the bearish control zone in November of 2017. So again, over a year retracement right here. And then again, go on a nice little run right there. And we see they're lasting, roughly a year, year and a half, something like that. So this last push up here, and again, I'm not getting bearish on the DXY. I'm not saying now I'm bearish on it or anything like that. We're going to talk about how this trend now is going to cause the beginning of another trend, or has already started, or getting the ball rolling. But right now we're talking about, long term. What we're looking at here is we go into the bullish bearish control zone. We exit the bearish control zone here. We go on that pretty epic run. We exit the bearish control zone on the monthly in August of 2021. And we're getting ready to potentially exit the bullish control zone in, roughly November of 2022. So that's another one of these nice little 1 year cycles. So, if we're in our second month of the correction now, or something along that, we could have 6 months, 9 months, 12 months to go. We could come down here to 100. We could come down to 98, 92. Who knows? But the fact of the matter is, we're still putting in higher lows and higher highs along the way. We're just now transitioning into a bull market, for the first time since the 1980s. So I'm still very, very bullish on the dollar. But right now, we're seeing, clear momentum shifting away from bullishness in the dollar into bearishness. Now, that being said, when we flip back to the daily, though, it looks like we're getting ready to confirm into a bear market, 821 bear cross, at least on the weekly. It looks like we're getting ready to have a deeper correction, but the dollar on the daily is literally at the 200 exponential and simple. So the next move we would expect is a bounce, a dead cat rally, a lower high retracement, however you want to look at it. So we're going to look at from the top of the move right here to where we're at right now, the 200 exponential and simple, essentially. We'll flip that one to yellow. And then what we're looking for is, wherever this bottoms, maybe it goes slightly lower, maybe it hits that same low again, it lines up with the 200 simple. That seems pretty likely. We're in the bearish control zone. The Stochs are rising. The blue Stoch is rising here. Looks very likely, it's going to exit the bearish control zone. It's going to cross, possibly. We're seeing 2 red histograms now, a little bit of weakness, possibly, going to print some bullish divergence. We have 2 red histograms right here. Could bottom out lower, but have a higher histogram. So we'll see. If we start to print bullish divergence here off of support, even though it looks like we're getting ready for a deeper retracement, I would expect something like a 0.5 retracement back to the upside first, or a 618, and then we can go lower. But typically when we hit this level, there's going to be too many people that are buyers. So it seems likely we're about to get a short to midterm rally in the DXY, but there's a good possibility this has at least topped for now. And then when I say for now, I'm talking about, for the next 6 months, 9 months, year and a half, something like that. So very, very important to pay attention to as we see what has been a beautiful macro trend that we've been able to take advantage of. One might even say abuse, over the last however long it's been, year and a half, 2 years, whatever. There's a good possibility that that might be changing. So we have to acknowledge that. And now we're going to correlate that with essentially all this other good stuff right here as well. So we looked at TNX, we looked at DXY, we see what's going on with them. Looks like they're showing some weakness, short, medium, long term, but potential that they could have a short-term bounce. And that's usually how it happens. People get the most bearish after the move has already happened. So people, again, are very bearish on the dollar right now. The DXY is topped, it's going down, and now it's right at support, and the move has already happened. So seems likely it's going to shake out all of those people. So what does that look like for the markets? Probably a retracement. So let's talk about what the markets are doing First, let's look at oil. So we had this descending channel. I'm on US oil, WTI crude. We had a nice little breakout, move to the upside, measure, move back to retest the 200 exponential. Could not get up to the 200 simple, and then we just confirmed into a bear market. So now we're officially in a bear market. We have confirmed that for the first time after a massive run up from like 40 bucks, all the way up to 130. And now we're confirming basically a double top rejection off 200 exponential, threatening the lows. We already wicked down below the low. We have not closed technically a lower low yet. So arguably, as long as we're above this white support right here, and as long as we're below this yellow resistance or the 200s or however you want to look at it, you could say we're in a channel right now. So now's the time to buy support. Maybe. You would be buying basically the lows saying, hey, we're going to double bottom and at least move back up to that 93 level. Now, I'm not necessarily convinced that's what's going to happen, but there's a valid argument to be made there for that. And that's a 20% move back up to retest the top of the range. So, I talk about it all the time. And you know what would actually be easier? They have all these tools. I know it's crazy. TradingView has actually put in, I know I bust TradingView's chops a lot, but they have actually put in quite a few useful tools that you can draw on your chart with. So if you wanted to do like say a channel or something like that, hey, they got a tool for that. So I guess we'll just use that tool. So, essentially this is what I'm looking at. The potential that, okay, we're actually going to bounce right here. That was just a low right there. Bounce back up. And we're just going to chop. We're just chop. Eventually, maybe we get a leg down, A, a B, a C, leg down. These chart gremlins, man. There's no way I would have drawn that arrow in blue going down. I just don't do it. It's not my style. I know they were in here. It's okay, TradingView. I praise you, and this is how you reward me. Changing the colors of my arrows again. I'm on to you, TradingView. I see what you're doing. So anyway, looks like, basically getting ready to bounce that area. Now, the problem is that when we look at the indicator oscillators, we're in the bearish control zone. There's definitely, it could run lower. It could definitely go lower here. We do see a bunch of red histograms. We're just now flipping the slope line red as well. Seems like this could be potentially the one that breaks. So I'm not exactly eager to like jump in here and, start long in oil. But, confirming into a bear market, double topping, retesting the lows. Seems like this is ready to go lower. Again, I'm not flipping the script on oil, and I know people are like, oh, you've been bullish on DXY for 2 years and now you're going to act like, we could have a year of it not being bullish. Well, yeah, when the charts say that, yeah, that's exactly what I'm going to say. I mean, I'm not married to any of these ideas. I don't give a shit. Just like to trade and make money. Okay, I don't care how I make it. I'm not going to say I'm Bankman-Fried. Like, I care how I make it, but, I'm not in love with a specific asset or asset class, which I think is a big issue. I think most people would probably do better if they got like some detachment work or like, I don't know what, like saw a psychiatrist about their investments or something like that. Like, no, you should not have 90% of your net worth in Tesla. No, you should not have 90% of your net worth in real estate. No, you should not have 90% of your net worth in crypto. No exceptions. No, zero exceptions. Like, it blows my mind. People are like, oh, yeah, I'm all in investing. Da, da, da. Oh, that's great. Yeah, tell me a little bit about it. Like, yeah, cryptos. I'm like, that doesn't count. Pick 2 things. Pick 3 things. 5 things. Come on. But anyway, US oil on the weekly. I mean, what really happened? Descending channel, little relief valve, continuation to the downside, retesting in 200 exponential. We're almost there now, 72. If we get to 72, might as well go to 65, hit daddy's target. Why not? Why not come down to 65? Then we can go to 150. Then we can go to 200. Then we can go to 9,000, whatever the bulls are predicting these days for a barrel of oil. But doesn't seem crazy we're going to get to 72. And if we get to 72, 64 is only a couple bucks away. So we'll see what happens. Maybe when that happens, we print some weekly bullish divergence as well. And then that helps us mark our bottom. We'll see. We'll see. And then just while we're here, let's look at the monthly. Lots and lots of beautiful, beautiful confluence right here. This is what we like to see. Absolutely love to see confluence like this. So we were fighting with the 200s here on the monthly. We had our capitulation dump. You can't see it, obviously, because I have auto turned off. And then, flip to 821 monthly, bullish. fight the 200, break through, back test, fight the 200 simple, break through, back test. I mean, this is part of the process, right? So what do? Well, we just confirmed into a bull market. We're above both 200 moving averages on the monthly. They're both blue. And it's like, oh, but what about the red histogram? Sure. It's got to flip red. What about the hard sell signal and we leave the bullish control zone? Of course, it's got to flip red. It's got to leave the bullish control zone. We're retracing. We're back testing. We broke through a key resistance. Now we're back testing that support. This is what constructive moves look like in the market. And if there's enough people that perceive this area as support, you know, our target at 60, whatever, low 60s to mid 70s. Well, I should say low 70s because it's already 77. I mean, that's mid 70s. So, you know, if enough people, buyers, not just random people, you know, not just, you know, Susie Homemaker, okay? Not just, you know, Freddie from the office. No, I'm talking about actual market participants, people that vote with their money. If enough of them see this as support, you know, this could be the floor. There's a lot of confluence at this level. And then, you know, we could take the next leg up. And arguably, you know, then it starts looking like basically, you know, a bottoming pattern. And once we break through this clear resistance we had, this cluster of resistance, you know, I mean, there's nothing left. At that point in time, this is it. You know, on the macro chart, this is the only other high that was ever higher than when we made it to right here. So what does this look like? How long does this retrace for? Does it go sideways? Does it go down? Does it go down to our target? You know, we look like goddamn genius. You know, we kiss the 8-ball. We sleep next to it at night. You know, the ladies get jealous, whatever. But then we bounce back up here, come all the way up, run for another 6 months, 9 months, 12 months, put in another lower high, come lower, or we break out. I mean, who knows what's going to happen after that? But on the monthly right now, you know, we're seeing a lot of these charts are not looking great on the daily, but when we look at the monthly, very clearly in a bull market. And, you know, obviously that can change over time, but. What's up, Angel? Good to see you. Can you check DXY behavior? Hang on one sec. Oh, excuse me. Sorry. Got that frog in my throat. You said, can you check DXY behavior on previous bull runs? Check DXY behavior on previous bull runs. Yeah. Oh, what's up, Prog? Good to see you. Oh, yeah, for sure, man. Yeah, definitely. Thanksgiving. He said, thanks for everything. For sure, brother. This is definitely the time of year to be thankful. Yeah, we can look at DXY really quick. Flip back over. So you want to see previous DXY behavior during a previous bull runs? Man, that's kind of vague because it depends on like the time frame. Are you talking about like a comparison between like DXY and like you know, like Dow Jones or something like that? I mean, we can just look at it like this. This is the easy way to look at it. I mean, we know what the bull runs were. You know, this is the 1980s. We actually we did a long breakdown. There's like an over 1 hour breakdown where I literally do exactly that. I talk about what's likely to happen in the future based on that, all that stuff. But you know, while we're here, the interesting thing to pay attention to that nobody ever talks about is this is 2000. So this is we have the massive run up to the dot-com bubble burst and then the explosion. The bubble pops right here. So this is a massive tech bubble basically centered in the United States. But, you know, everybody's got their, you know, hands in the proverbial cookie jar, so to speak. So even though it was a USA problem, it was our stock market that crashed. You know, all the money from around the world that's in the stock market affects other people's wealth around the world. So that's the important thing. This is 2001. Massive bull run right here in the DXY leading up to the pop. So the dollar is strong right here, and also the U.S. stock market is strong, okay? And then here, obviously, dot-com bubble burst, the dollar weakens, you know, goes all the way down. And then where is the trough? So 2000 was the peak. 2008 is the trough. So 2008 was the global financial crisis. 2008 was in the United States, you know, the mortgage crisis. the housing market crisis, whatever you want to call it. So here we have a dot-com bubble burst. Stock market basically implodes, and that's after a massive bull run in the dollar. And then we have a massive bear run in the dollar, and then depending on what index we look at, it either went sideways this whole time and didn't put in new highs, or a couple of them did. But then we get down to 2008, and again, stock market crashes. So here we have a stock market crash when the dollar's strong after a massive bull run. Here we have a stock market crash when the dollar's weak during a massive bull run. So any kind of correlation that you want to try to draw between the strength in the dollar and the strength in the markets, you have to be able to understand and fully comprehend the macro. The macro is exponentially more important once you look at those two clear data points. Once you see that and you recognize that, that will literally change the way you look at everything. I'm glad that was a great question, honestly. And I'll find that video or whatever and put the link up or something. But since then, since 2008, since the global financial crisis, so here USA problem, here world problem, since then the dollar has only strengthened. It has only strengthened. So is it possible the same way this was a top in the stock market here after a long run in the dollar, and then the stock market and the dollar capitulate together for, the next, some of the time, it wasn't the entire 8 years, because obviously we saw another pushback up to the highs. And then from then, the dollar has gone parabolic. Stock market has basically gone parabolic too. So there's a lot of ways you can look at it. There's a lot of ways you can break it down. You can put them up on one chart and kind of look at them for a little more of a visual representation. You can look at what are leading and lagging, indicators or signals or whatever. But in the end, all we have is a few data points we can use, especially on a macro like that. So anyway, let's keep moving here. So we got the VIX. So we've been talking about the VIX. This is very, very important now. So we broke down from our ascending support right here. We did it once before, and that's okay. We put in a higher low. And now here we are, backtest rejection, volatility going lower. And now where we at? We're threatening that previous low. We're threatening that what should be support right here. And we're threatening to put in a lower low. So, depending on how you want to look at this, we basically have a series of higher highs and higher lows. Then we have a consolidation pattern right here where we have a higher low and we have lower highs. So now we're in this little triangle, this little wedge, okay? And something like this, don't worry about this little ascending support line right here, that little guy, but just for, for visual representation. Don't worry about this little guy either. Just keep it simple. Get this a little brighter. Okay, so we got basically now higher lows, lower highs. So we're basically just consolidating and tightening range. So one of two things going to happen right here. We're either going to bounce right here and not put in a lower high. Lower low. And then we have this whole way to run. And we know when the VIX is going up, especially when it's spiking quickly, the stock market is, I don't want to say crashing, but having, an accelerated pullback. Or we don't find support right here. We take out this previous low right here. And then, you can't really deny at that point in time, we basically have a series of highs, then a low, then a lower high, then a lower low. So yeah, sure, maybe we bounce at 18, maybe we bounce at 16 or 15 or whatever. But the fact of the matter is, we're down in a downtrend on volatility, which likely means stock prices continuing to the upside, because obviously volatility and complacency go hand in hand. So if you ask me the situation, what's most likely to happen? Well, we just said it with the channel. When we're at resistance, we should be selling. When we're at support, we should be buying until we get that break finally, in which case, we can easily flip to the other side of the trade, admit we're wrong because we're not stubborn, and then move on with our lives. So now let's look at the Dow Jones. Oh, you know what? And I'm just going to flip out to the monthly real quick, and you can see what I'm talking about here real quick. So this is 2000. This is the dot-com bubble burst. Okay, and then we come down here and bottom in 2002. We come all the way up and put in a new high in 2007, 2008. And then, this is basically this breakdown right here into 2009, a new lower low. But remember what the dollar was doing. It was spiking here, and then it was, at a trough here. And then since then, the dollar has been strong this whole time. So it's not crazy that we can have both a strong DXY the dollar's strong compared to other currencies, and also the stock market go parabolic. It's only these last, basically like few months where we've had this issue where, hey, as long as the DXY is strengthening, and as long as, there's inflation, as long as all these other factors are going on, we're having issues. So matter of fact, while we're here, let's talk about today's theme, because this is honestly, in my opinion, the most important thing happening right now in the markets. Okay. And we're going to actually get into the Dow Jones a little deeper than usual, because, we're on to basically what the next potential or could be trend is. You guys know I'm still bearish because most things are pointing bearish, but the Dow Jones is giving us signals that, that might be it. Like, this thing's over, and actually we're ready to rip. The 200 exponential on the daily is about to cross above the 200 simple. 200 simple is basically flat, so it won't take long for it to flip blue again. We're very close to taking out the previous high right here. So then, at that point in time, we're right here. We're only about, 9% or something like that off of the all-time highs on the Dow Jones. 8.1%. We could legitimately do that in 2 weeks. Before the end of the year, Dow Jones could be at new all-time highs. And you're like, that's ridiculous. The tight monetary conditions and the blah, 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 blah. You know what? That's why fundamentals fuck people up. Because if we look at this, and then you tell me what's going on in the world, I'll tell you, I don't know, man. Fundamentally, doesn't seem likely we're going to new all-time highs. Not without turning on the money printer, not without something changing, the Fed cutting, the easing, whatever it is. And yet, and again, we could get a fake out here again. It could fail. But it's worth respecting the fact that it's okay for us to fundamentally think things look bad, but actually, they're not that bad. And we're going to break down actually some earnings and some details on a couple of these big names in the Dow. Actually, I'm just going to work through the rest of this and then we'll work our way over there. So very, very important though, this chart right now. Here we are on the weekly, parabolic bounce off the 200s already basically, threatening, or technically we already closed above that previous high right here. It's like almost the same level. Arguably, we could say it's exactly the same level. So maybe this sells off, gets another rejection. We go back down here. It's a double top and then we, come back down to the bottom. 100% a possibility. But let's remember, we put in a lower low, push below the 200 exponential and simple. We have bullish divergence on both of our indicator oscillators. We then get a nice, maybe not on this one. Then get a nice bounce, bunch of green histograms, red slope line, pass over the zero line, flip the slope line blue, hard buy signal. 821 bull cross on the weekly. Taking out previous highs. Like, I get it. It's crazy. It's like, how could we possibly be going to new all-time highs? Technically, it's starting to look more likely than not on the Dow Jones. Keep in mind, on the Dow Jones. That's it. And stop, full stop for now. On the monthly, we crossed the 821 bearish. We V-bottomed. If that's a V-bottom, right? We didn't have a wick rejection, but that's a V-bottom. Now, is it going to be the macro bottom, or do we just put in a lower high, go lower? I don't know. Probably. But that's about as V as it gets. Bullish engulfing candle back above the 821. Bull cross pushing up again. 8% from the all-time highs. It's worth paying attention to. That's all I'm saying. I know everybody gets stuck in their ways. Like, after you're bullish for a year or 2 years or whatever, it's hard to flip the other way. After you're bearish for a few years, it's hard to flip the other way. You know what I do? I just use the technicals, and then it's just so much easier because it doesn't matter what I think or how I feel. What I know is, if this 821 bull cross, and then we get above the 200 exponential and it flips blue, and then the 200 simple flips blue, and then the 200 exponential cross above the 200 simple, that's my signal. It doesn't have to be right that second. I can wait for a pullback, a consolidation, a retest, a good entry. I don't have to just jump right in all the way. I don't have to go in 100%. I can put in 10% or 20% of a position and then add into strength. A lot of other things could happen here, but we have to respect the fact that this is telling us right now, hey, we're flipping into a bull market again. It could fail. If there's more sellers than buyers, by all means, who cares what the indicators say? But it's worth paying attention to, guys. It's worth paying attention to, because I'm telling you, there's people still sitting out the market from 2019 because they sold and then didn't rebuy in time. There's still people sitting out the market from 2008 and they hate stocks. There's still people sitting out the market from 2000 waiting for the next big crash because it didn't go low enough. I mean, there's people that have sat out 20, 30 plus years in these markets because they were too stubborn to admit, hey, it doesn't matter how I feel or what I think is going to happen or what's happening around me based on the fundamentals. What matters is the technicals. And we can look at some of the fundamentals, and arguably some of them are telling us, hey, actually, the inflation is distorting the numbers. So sure, on paper, it looks great. But in real life, did they sell more? Who cares? Companies making more money. That's more earnings. That's a good investment. That's how you calculate the value, of the company. If you're going to invest in something and it averages 10% growth per year, and you're like, well, this year's 10% growth doesn't count because of the inflation. Well, I mean, sure, the numbers are skewed or whatever, but it's still 10% growth. What about the companies that didn't grow 10%? They're obviously worse. So I'll take the one that grew 10% in a 6 or 10 or 30%, whatever you want to call it, inflation environment over the one that, lost 30%. So SPY, this is what we're paying attention to right now. Okay, we're going to flip the script real quick. Everything else is telling us something different but the Dow Jones. Okay, everything else basically. The dollar at support, DXY. TNX probably could go a little lower actually. But look at SPY. Hit support perfectly, back testing resistance, the previous fib and the 200s. So that's basically where you would expect at least a short to medium term, likely rejection or top. If we look at that on the weekly chart, bounce perfectly off the 200 exponential and simple. Again, we see the bullish divergence on the weekly and then a nice move afterwards. So far, still lower highs though. Still a ways away from that. Potential to cross the 821 bullish right here. But we know what happened the last two times. It got rejected hard. We got rejected hard. So my bias, still going to be short term to the downside until they start closing back above the 200 exponential and simple. And then you know what? When they start flipping blue, my bias is going to change. Not because now I suddenly like the S&P or suddenly like the Dow or suddenly hate Bitcoin. No, it's because the technicals tell me to. And you guys know what's up. So monthly on SPY, back testing 200 exponential, the 821 bear cross. Doesn't look nearly as good, but a close above those levels would look good. So we'll see what happens in the next week. Obviously, quite a bit of momentum to the downside. And now, could it be bottoming? Could we be about to bounce the bearish control zone? Could we be about to push back up at least to retest the red slope line, put in a lower high, and then roll over? Could we see another, 6, 7, 10% rally? Guys, I don't think that we should count it out right now. That's my opinion. So Qs, I'm going to kind of speed through here. It's exactly the same, basically. Qs have underperformed slightly, so they're not quite up to the 200 exponential and simple. So remember, everybody was talking about, remember, and I have said this so many times, repeated all the bullshit from all these talking heads, and remember what they were all saying. It's going to be small cap growth that leads us out of this recession. It's going to be tech. It's going to be, all these blah, blah, blah companies that don't make any money. All these small companies. They're the ones that are going to lead us out of the recession because that's what happens. Oh, really? It's definitely not going to be the Dow Jones. It's not going to be the big industrial, blue chips. No. It's definitely going to be small cap growth, not value. And now here we are, the same way. The entire market was wrong about energy, and then energy goes parabolic, and then everybody has to jump on the energy train. The entire market was wrong about, the industrials, wrong about, the value stuff, and was underweight value, and now they all have to jump back into that. So we're seeing essentially the same thing again. The market's wrong. It has to adjust. We see a big burst to the upside. Is Dow Jones about to be the next energy? You're like, holy shit, did I just take 34 minutes to make my point? Maybe. So anyway, the Q's looking rough. I'm not even gonna look at the longer time frames. They look weak. IWM, Russell. Okay, the Russells we're paying attention to right here as well, because it's a little different. When we came down here to the lows, we put in a double bottom. Everything else put in a new low. And when I say everything, I mean, the other three major indices. Put in a new low, Russell didn't. Remember, this is when everybody was saying, Russell's going to lead us out of this. It's going to lead us out. Look at the Russell right here and then compare it to the Dow Jones. Remember, Dow Jones, 9% to get back to new all-time highs. Russell is 31% away. So I guess they were wrong and we were right again. I mean, right? Or suddenly it's just going to like shoot up 25% to catch up to the Dow. It's possible. It's possible. Worth paying attention to what's happening right here, though. Again, at resistance. So everything is either at resistance or, in the Q's case, the NASDAQ case, underperforming. But we get the point. Bunch of stuff's at support. When that stuff was strong, everything else was weak. Bunch of stuff's at resistance. When that stuff was strong, the DXY, TNX was weak. So you guys get it now. We're basically saying, hey, a bunch of stuff's at support and the opposite stuff is at resistance. So the likelihood that we bounce this area seems likely to me. So XLE next. So XLE basically just hanging out at the highs. Indicator oscillators coming down. Potential for a bullish reset happening right now. If this just continues to go sideways and these just trend down, eventually there's nowhere to go but up. There's nowhere to go but up. But it's worth paying attention to, once again, the possibility that we could be, double topping right here, or at least now range bound, between essentially this little support and that little resistance. So this chart's ugly. So yeah, that's it. So we're done with this one. We're not going to mess with, let's just zoom through here really quick. So Tesla getting beat down at the lows. A little bit of a bounce right here from the 236, trying to reclaim this level. But again, pretty beat down. We do see the potential of that bullish divergence. So we're talking about the TNA trade. That's, we closed back above the 236. It's holiday weekend. We'll see what happens here. But, come Monday, we could be looking for at least that move back up right here. And again, this, I don't try to always be a contrarian, but all of a sudden everybody hates Tesla after it just like melted down. So, I mean, is now the time to buy up all the Tesla traders stock? Maybe. Microsoft, pretty beat down. This one's important to pay attention to. We're going to actually look at it later when we do the Dow Jones breakdown. But just been trending down, steady to the downside. Had a nice little bounce. Decent. Still below 200. So underperforming, arguably, with some bullish divergence. Apple holding up the best probably out of the entire tech space. Still technically in a bear market, but at least fighting to maintain it. We'll see what happens. Again, if it gets back above here and starts flipping these blue again, I'm done. I'm not going to be bearish on Apple anymore. We're probably just going to go to new all-time highs. Keep in mind, too, Apple, one of the strongest stocks, not making new highs outside of the Dow Jones as well. So Google, still at the lows. I mean, we hit a perfect fib. We back tested the fib before it. We crossed 821 bullish. We're still underperforming substantially. So any of these ones that are underperforming, if we just go sideways and don't do anything for long enough, expect these to just take turns popping off. It's the same thing that happens with shitcoins. When like Bitcoin starts to move bullish or something like that, and like one little shitcoin pops or one little shitcoin leads the move, and the next thing you know, it's like pop, 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 pop. It's like popcorn. Expect that to happen to the ones that have underperformed under the 200s if everything else starts actually going bullish, like confirming bullish, getting back above 200s. Expect the rest of the market to catch up, especially some of these big names. Meta is next, still hanging out at the lows, basically all but filled the gap, back testing resistance. Doesn't have the same divergence or anything like that. Arguably, we have a little bit, it looks like on the stochastics. Basically same lows, but much lower low on price. So we have some bullish divergence on the stochastics at least. Again, substantial underperformer. So, if we get back above support right here at 125, we're at 112 right now. That's a 37% move up. Arguably, if you just say, F it, the 821's about to cross right here, I'm sure of it. I don't care about risk management. I'll just take the trade. I mean, depending, we could be looking at a 50% burst. Now, does it just melt down after that? Do we go to new all-time highs? Who knows? But Amazon is next. Looking pretty weak right here, obviously. We have a low. We have a slightly higher low, but we're basically at the lows. Broke down from key support, and we're just hanging out between these levels right now. Looking pretty weak right now. All right, so now we ripped through all that stuff. Let's get over here and talk about the big theme and what's going on. So gold, again, at resistance. Basically, this is the exact area we were looking for. Hanging out at the lows, back testing the 200s, slightly higher, a higher low right here, and then slightly higher high to retest the 200 simple. Do we have to? No. Hard sell coming out of the bullish control zone. Could be about to melt down right now. That's fine. We got close enough. We don't have to hit our target perfectly to the T with a wick and then immediately reverse every time. Most of the time we do, but not every time. So gold at resistance, counter the dollar and TNX. A bunch of stocks major indices, everything but the Dow at resistance. So you guys are getting the trend here, obviously. And then in a second, we're going to actually figure out, hey, why is the Dow Jones looking so good right now? Why is it overperforming everything? And you're like, I don't know. Maybe it's because individual stocks inside of it are doing well. Holy shit, spoiler alert. So silver, again, same thing, hit our target almost perfectly, a couple pennies off right here. That's fine. Hanging out. Doesn't look terrible right now, trying to reclaim the 200s. If we do, maybe get bullish. Spoiler alert. Silver Junior miners, we've been talking about these, talking about the potential that we're going to bottom out right here at the 618. We're going to bottom out at this ascending support for this giant triangle that goes back like 2015 was the low right here. The actual pattern starts in 2012. We basically just pinched inside this thing right here. We came down, we hit support nicely. We talked about these trade setups in advance. Okay. I mean, what is it? To 66% back to the top of the channel. I mean, if we reclaim the 200 exponential and simple here, starts to look bullish, at least for an attempted push up. Now it could fail right here. It could fail right here. It could immediately get rejected and go lower. But we're talking about 40% just to stay in the range. Just to not even have a breakout or any kind of trend shift or anything like that. Just to keep oscillating in the range. So worth paying attention to. Some of this stuff is telling us, there's potential that actually we could see further upside. And some of the things that are telling us we could see further upside, spoiler alert, I'm going to show you some at the end. There's some serious opportunity in these things if we're right. So we don't always have to pick the bottom on the first thing that bottoms or pick the top on the first thing that tops, as long as we can recognize when the trend is changing. So GSG, nothing changed, still trading inside the channel right here at the lows. So arguably, buy the lows, sell the highs, or is this going to be the break? Well, we are fighting to maintain the bull market. 200 simple is back on top right here, very close to flipping into the bear market. So could go either way. I'm waiting for a little break in one direction or the other, some kind of move here on this. LNG is next. Obviously bouncing off that ascending support. We tested it once right here, or formed it once right here, and then tested it that first time right there. Now we're back above the 821. Looks like we want to come back up here and try the top of the range again. Are we going to print another drive of bearish divergence? The same that we've been doing this whole run? Yeah, probably. Probably going to print more bearish divergence, come back down to the bottom again, probably going to print more bearish, and then eventually break and hit our target down here. Mosaic just going sideways. Still got to see it do something. Uranium, same thing. CCJ, same thing. Everything just fighting to hold on to the 200s here. The stuff that never went into the bear market is just trying to stay in the bull market. It's trying to stay alive. Tilray, so obviously the trade setup played out. Broke back down here below the 821. We still have this kind of ascending support, but the truth is we should have drawn in like a parabolic support right here. So depending on how you look at this, we basically had a strong support right here. The trend gets even stronger, and now we're going almost straight up. Here we're going literally straight up, and then we hit our target. Obviously trade setup, depending on, when and if you took it, 30 to 40% almost. And then, of course, breaking back down below the 821, likely to just continue back to the downside. Maybe we come back down here. Eventually we bottom out. Who knows? But in the meantime, you know what it is. All right, so we made it. We made it to the major Dow Jones stocks that we want to look at today. So what I did was I grabbed the top 10 stocks in the Dow Jones, took a look at some of the earnings, took a look at, some of the important metrics, and then obviously the technicals as well. So here we have UNH, so obviously healthcare, massive healthcare provider. And the biggest stock in the Dow Jones, biggest weighting. Sorry, let me use your words, please. Okay, sure. So biggest weighting in the Dow Jones, massive, obviously. And here we see basically a triple top resistance right here. We see higher lows right here. We're above the 200 exponential and simple. 200 simple on top, so that's not great. So one of two things going to happen. We're getting ready for this thing to literally break out to the upside and just rip to new all-time highs. Not uncommon, or not crazy when you look at the actual Dow Jones. Or we're getting ready to break down below this, fall out of this pattern, and then see, whatever retracement we're going to do. I mean, I don't know. Are we going to retrace back here to March of 2020 when this was $187 and now it's $550? I don't know. Maybe. So is this just BS? Is this just some kind of short squeeze? Is this all total crap? What's the deal here? How is it possible that the world sucks and there's all these bad things going on and there's just everything's terrible and we're about to go into a global recession and somehow things are getting ready to put in new all-time highs. How's it possible? And is this the next energy trade? Are you guys picking up on this theme here? Revenue a year ago, Q3 2021, was $72 billion. Net income, $4 billion. Profit margin, 5%. And then we saw 73, 4, 5, 85, 6, 85, 6, 85, 6. I mean, so they're growing. You know, they're making money. They're at least maintaining, even if they're not like killing it. They're at least not going down. I mean, they're doing okay. PE 25. Earnings per share, $20. I mean, it's not a bad chart. It's not bad fundamentals. There's definitely an argument here that's like, hey, you know, sure, if this thing breaks out to upside, starts making more money, could we see potential new all-time highs on the Dow Jones? Possibly. That stock's definitely going to have something to do with it. If that thing breaks out to the upside, expect the Dow Jones likely up there. So next we have Goldman Sachs. Never heard of it personally, but it's like a big deal, I guess. So GS ticker, again, you know, this one is a little ways off the high. Obviously, we you know, topped out right here, double top with that bearish divergence, and then broke down, lost to 200s, confirmed into the bear market. Took a deep dive, back tested 200s, came back down higher low, a signal to the market, hey, this trend might be ending. Back tested 200s again, conquered them, made them their bitch. 821 flip bullish here, 200 exponential and simple, flip bullish here, 200 exponential on top. Remember we talk about the exhaustion, 200 exponentials on the bottom. And then when the cross happens back to the upside, saying, hey, this trend to the downside might be getting exhausted. The same way with when the 200 simple is on top in an uptrend, we say, hey, this trend to the upside might be getting exhausted. It's almost, that's why we use both of them. So the bull trend was getting exhausted here and then melt down into a bear trend. The bear trend was getting exhausted here. And then here we took out the previous high. We put in higher lows, higher highs. And now here we are a couple percent off the highs for Goldman Sachs right here. So again, let's look at this. Is this bullshit? Is this bullish exuberance? Is this a short squeeze? Or is this real? Well, you know, since these are not cryptos, they're actual companies, we can look and see, hey, are they doing better or worse? Revenue, 14.6 billion. Net income, 5.3. Profit margin, 36. Then 13,429, 13,429, 13,322. And then this is our comp right here. Revenue, 17.5, 3, and 17. So revenue here was 15, 14.5. Revenue here is 17.5. So we see about 3 billion more in revenue. Net income, 5.3 back here. Net income now, 3 billion. I mean, not quite cut in half, but they did an extra, you know, 3 billion in revenue and made 2.5 billion less. So expenses going through the roof. Probably they're trading, you know, I mean, let's be real. But regardless. And then profit margin was 36. Now we're at 17.5. So if this was at 36 profit margin, making 5 billion on 15 in Q3 of 2021, I wish TradingView showed us more information so we could see further comps. But compared to that, does Goldman Sachs deserve to be at these valuations? Does it deserve to be getting ready to go to new all-time highs? I don't think so. I do not think so. Nope. No siree. And that's my opinion based on fundamentals. Technicals, maybe. All right, next we got Home Depot. So Home Depot, again, bear market. Now this one is showing us, hey, there might be some opportunity in this actually. Okay, bear market, back test reversion to the mean, double bottom at the lows, something similar to what we saw at the Russell. The Russell just back here at the 200s. This is broke above, found support, started to move, getting ready to potentially take out that previous high. 200 exponential is already flipped blue and we're above it. 200 simple, almost flat. Very close to confirming back into a bull market with Home Depot. So, you know, essentially what we're looking at right now, and, you know, we talk about this pattern all the freaking time, you know, because we see them all the freaking time and they're, and they're reliable all the freaking time. The old, you know what it is. I can't actually say it, so you'll just have to imagine what I'm about to say. All right, I'm going to try to say it the first time. You ready? The old W double bottom. Oh, God, I almost still fucked it up. The old W double bottom. That's right. It's like the fucking unicorn of the charts. All right, so there we have it. A little W action right here. Double bottom. You know, arguably, oh, look, we're just in a channel. We hit the low, we bounce to the top. We hit the top, we bounce to the bottom. But things have changed now. We have a little momentum in our favor. We're back above the 200s. And we're ramping into this thing. So Home Depot right now, you know, and where does that take Home Depot? Okay, if we break through this, if, you know, the juggernaut built up enough steam to bust nuts in the bear's butts and just rip through here, okay, where does that take us to? Little measure move action, you know, from the bottom of the pattern to the neckline resistance, breakout. Oh, look, back to the top. Oh, little confluence. Is Home Depot getting ready to go nasty? From the breakout, I'm not even going to measure it from where we're at right now. 25%, and then after that, it's like blue sky breakout, rocket ships, moon landing, all that good stuff. Maybe, or it goes straight to zero. I don't know. I'm just throwing out a hypothetical scenario where Home Depot could be an absolutely amazing possibility if suddenly, actually, like maybe just things aren't as bad as everybody said they are. Maybe they are as bad. Maybe they're worse. And you're like, God damn it. I want to still be bearish. I get it. I get it. It's okay. You can still be bearish for a little bit, but let's not let it wreck our trading account. So, you know, do we come down here to the 200s, get a little support right here, get a perfect entry, you know, put in a nice little stop right there, and then get even more move out of it? Do we not get greedy for the 33% with the 5% stop loss and the 7 to 9 risk reward ratio, and we just grab it up first thing and just, you know, don't look a gift horse in the mouth? Extend out that stop a little bit, 7%, and then we get that top target up here, 32%. Oh, wait, hang on. Nope, that was a lie. My life is a lie. 7 stop loss, 27% upside, 3.7 to 1 risk reward ratio. I'm just saying, and that's just to retest the highs. We know if the bull market starts up again and it's just game time, I mean, it's probably going to blue sky breakout, in which case it's probably going much, much higher. And that's how you end up basically with a nice position that started off as a trade. And obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Everything we looked at today is either going to go to zero or parabolic. Whatever the opposite of whatever you think I'm telling you to do is going to happen. Okay? So definitely do not think that there's like some subtle hints as to whether you should buy or sell or take these trade setups. Like, unless you want to live in a van down by the river. And then, by all means, do whatever you want. McDonald's. There's no... sorry. I should have warned you guys we're going to be looking at fundamentals today too. So let's look at Home Depot, see what the deal is. Revenue was 36,411, 35,309, 38,410, 43,511, 38,411. So compared to, you know, the last couple quarters, not really great. I mean, it's the same as 2 quarters ago. It's down from 1 quarter ago. Profit margin's still pretty good. Net income's not bad. What about the comp from a year ago? 36,411, 38,411. So they took in like $2 billion extra and made around the same amount of money. So, and that, keep in mind, these numbers are not adjusted for inflation. So if we've been running 2% or 6% or 10% or 20% inflation, you know, go ahead and adjust the numbers for that and see like, hey, how is the company actually doing with 20% inflation or 10% inflation or whatever? And again, would you rather a company that's doing better? The inflation we have, it's there. It's going. You can argue over what it is, fight over what it is. You know, we can talk about semantics and how it should be measured this way, and it's inaccurate, and they're swapping out, you know, ground rat for filet mignon or whatever. Who gives a shit? You know, we can talk about that all day. It's fun while you have a beer or whatever, but it's not useful. Here we have something useful. So does Home Depot go up 25% and then that corresponds with those earnings? Yeah, that seems likely. I don't see like a crazy divergence between the valuation and, you know, what could potentially happen based on earnings, sales, you know. McDonald's Corporation, never heard of it. I think it's a fine dining, it's like real classy restaurant. I've never been there. I heard it's nice. I don't know anyone that's actually been there, but I've heard people talk about it. They've reflected on some like really nice quality products, staple of especially the American diet, but I think they're international. They have them around the world. I believe there's one in the very tippity top of the Eiffel Tower, if I'm not mistaken. It's like super crazy though. You have to like get a reservation like a year in advance. It's insane. It's insane. The food is supposed to be out of this world though. They have what do they call it? They're like little sort of like blocks of, I think it's chicken, some kind of like weird white meat with like a little crust on it. Oh, I've heard about it. I've never had them personally. Can't afford all that. But so anyway, this really nice place, this five-star McDonald's Corporation at the highs, crushing it. Obviously doing extremely well. You know, obviously we're seeing, you know, bifurcation of the markets. You know, those top people that are able to afford this gourmet, really nice quality food are not struggling at all. Now we have to look at this chart. The 821 potentially, you know, putting a lower high, getting ready for a bear cross. We just retested the 200s. We did go to a new all-time high after that cycle high. So not a big deal if we come back down, test them again before we rip. $9 downside, something like that. Looks like it's already ready potentially. It was very close right here. The bears are trying to step in, push it back down. We'll see what happens. Excuse me. Let's look at the earnings too on this one. So a year ago, it was 5.3 billion, 1.8 and 34%. We'll skip through the middle ones here and we're at 5.99. So up from 5.4 to 6. Net income up from 1.86 to 2. Profit margin 34.67% down to 33.75%. So profit margin staying fairly consistent even with, you know, inflation. Revenue up substantially, and you're like, well, you're saying substantially, it's only up, you know, $0.6 billion. It's only $600 million higher than it was a year ago, and that's like 10%, and there's 10% inflation. Sure, I totally agree. I completely agree with you that this number could falsely represent how McDonald's is doing. But if every company is held to the same standard against that inflation, which it is, you know, and some people have more inflation, some have less, but it doesn't matter. You know, the inflation rate in general is what we're paying attention to. You know, if there is 100% a 5% inflation rate for the next 10 years, and I tell you, hey, McDonald's is going to keep up, but everything else is going to lose versus it, but the McDonald's numbers are bullshit because the inflation's inflating their numbers and it's making it look like who cares? They're still doing better than everybody else. So McDonald's looks good. Looks like it deserves to be at, you know, or around all-time highs. Could it have a temporary pullback? Sure. But I mean, this chart is as up and to the right as it gets. So we're seeing a couple things, super, super bullish. A couple things kind of weak. Getting towards the end here. I think we have like 4 or 5 more to go. Amgen is next. It's like aeronautics, all kind of like fancy stuff. It's like code for, you know, like government contract stuff, you know. It's, you know, like low key. But anyway, Amgen daily highs just gapped up right here. You know, no, wait, I'm sorry. Amgen, this is a biopharmaceuticals, I think. Yeah. Sorry. So anyway, gapped up right here, hanging out at the highs. Just crossed the 200 exponential, back above the 200 simple after essentially like a crazy long, just kind of consolidation sideways pattern. Higher lows the whole time. Basically just, you know, I mean, it's like a bullish triangle right here, essentially. We basically have this resistance. We're having difficulty getting above it. We smack our head on it 37 times in a row. And then eventually break through it. You know, and depending on how you want to look at this, you know, we have, regardless of whether it touches this line perfectly, whether you draw it in different than I do, the fact of the matter is we have a low, we have a higher low, we have another higher low. We have a series of, you know, basically the same highs. So we break through that. Now we expect to get the measure move to the upside of this pattern. So depending on how you want to do it, we take like something like the chunk right here in the middle. Take it from the breakout. We could do a Fibonacci extension. There's lots of different ways we could, you know, get our target right here. But essentially looking at like 328 right here. We're at about 283 right now. You know, something like that. And, you know, at that point in time, it could easily run. I'm not saying we get up there and then immediately just go straight to zero. But worth paying attention to. Jump into the earnings really quick here. So a year ago comp was 6.7 billion, 1.88 net, and 28% profit margin. and now it's 6.58 compared to 6.71. It's 2.14 compared to 1.88, and it's 32 compared to 28. So the revenue is actually lower. It was only 6.5 versus 6.7, but the net back here was 1.88 with a 28% profit margin. The net here was 2.1 with a 32% profit margin. So even with all the inflation, with everything going on, they've managed to, cut costs or increase profitability. So do they deserve to be at all-time high valuations? Yeah, they do. Yep. Regardless of, the Fed tightening, all this other stuff, all the narratives, the land war, the energy crisis, the blah, 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 blah. Microsoft next. We already looked at Microsoft. Let's look at the earnings though. The actual chart, pretty terrible. Still obviously that move up to 264, and then we can start talking about all that good stuff. So a year ago comp was 45 billion, 20 net with a 45% profit margin. And then the revenue was 50, so up 10% from the 45. The net was only 17, down 3 from the 20. And then the profit margin was 35, down from 45, which is more in line. That was kind of an anomaly over here. It's more in line with what you would expect. So does Microsoft deserve to be at all-time highs? No, probably not. Is it? No, probably not. Does it deserve to be at cycle lows though? Also, maybe not. So Caterpillar next. These are, there's a bunch of different kinds of them. They're the little kind of creepy crawly little worms. They're most of the time furry. Sometimes they are green with weird dots and stuff on them. You should not ever touch, pet, or lick them, no matter how soft or cuddly they look. A lot of times they turn into butterflies, but sometimes they do turn into moths. So, but yeah, that's Caterpillar. So they are a butterfly manufacturing company. So it's worth paying attention to here. This was our peak high right here. We did a bunch of TA on this a long, long time ago in a galaxy far, far away. It went sideways forever. Come down here to essentially the 382. Finally hit the 382. Shot a little lower right here, and then just went absolutely parabolic. Push up to 200s, gapped up right here. The 8 and 21, obviously bullish the whole time. 200 exponential crossing above 200 simple. Right about to be back in a bull market at new all-time highs. Well, at the all-time high. So maybe, we're seeing a little weakness right here. Maybe it's about to get rejected, double top, meltdown. Definitely a possibility. Definitely a possibility. But let's pay attention. This move up here was so damn quick, though. I don't know if this can be maintainable. The best thing this could possibly do is just consolidate for a while. It could just go straight up, but so let's look at this and see, hey, is there a divergence between the fundamentals and the technicals or no? Revenue was 12.4, net income was 1.4, profit margin was 11.5. Revenue 15 instead of 12.5, so definitely better. Net income was 2 instead of 1.4. I would say that's a big fucking deal. Profit margin 13.6% instead of 11.5. So is this justified? Fuck yeah. Hell yeah, it is. It should be higher than it is probably. All right, and then Visa. We all know what Visa is. Everybody knows. It's a really nice purse brand. They make the little purses for the ladies and stuff. I think they make some man bags too. I shouldn't discriminate. The kind of one strap, sort of European man bags. So yeah, Visa been melting down consistently. Lower highs and lower lows. Retesting at 200s, back on top at 200 exponential, above the 200 simple. They're very close to each other. Is it crazy to think 200 simple could flip blue, 200 exponential could cross above? And then we start into the next bull market, and you're like, but the fundamentals, but the war and the recessions, and sure, we do see a little bit of bearish divergence here on the daily. It's definitely a possibility. If we go out here and check out the financials, we see Q4 2021. Revenue 6.5 billion, net income 3.5 billion, profit margin 53%. We look at the current, we're up from 6.5 billion to 7.8 billion. We're up from 3.5 to 3.8. So about a 10%. Profit margin was 53, now it's 50. Pretty consistent along the way between, 45 and 50. 45 and 55. So 50 is pretty average. Doesn't look bad. Doesn't look bad. They're doing work here. They're making money. Do they deserve to be this low when they're essentially putting in record numbers, or should they be up here at 250? Should they, miraculously just gap up 20% and just get back to where they were before, or even higher, because they're making more money, they're more profitable, they're putting in record numbers. So we are seeing some divergences. Some things are trading above where they should be. Some things are trading below where they should be. Is it because of valuations? Is it because of debt? Is it because of, comps? Yeah, all those things. But let's look at these things, because nobody talks about any of this stuff. Nobody talks about, hey, should the Dow Jones right now be looking like it's getting ready to threaten the all-time highs? Should these companies be trading at record high valuation? Nobody talks about any of that stuff. People don't do actual fundamental or technical analysis anymore. They create themes and then they run with those themes. And then when the theme changes, when the data that gave them that theme or that idea or whatever changes, they just stick to their guns. And then 30 years go by and then they've written 6 books and they've been talking about the crash forever. And, you're Peter Schiff. Or, name any other X random person that's just, the same bullshit over and over again. Can't ever change, can't ever adjust, can't ever be right, but, broken clock style. Honeywell. Big stuff right here, okay? Honeywell ham, I believe it is. They are a ham manufacturer or a ham producer or whatever. They're into meat, okay? Mostly pig meat. I think that's right. Honeywell? Yeah, that's it. Basically at the highs right here. Bull market. Back above 200 exponential on simple, 200 exponential on top, 821 bull cross right here, going absolutely parabolic. Is this sustainable right now? I mean, yeah, it could definitely have a pullback, but I mean, it's looking pretty damn juicy. Couple percent off the highs. Does it deserve to be there? Revenue, 8.5 billion. Net income, 1.26 billion. Profit margin, 14.8. So we went from 8.5 to 8.9. I'd say that's pretty good. We went from 1.26 to 1.55. Well, that's pretty damn good. We went from 14.8 to 17.35. So does Honeywell, the meat producer, because that's obviously what this company is. Don't verify it for yourself. I don't care. It's definitely pork meat producer. But they do packaging and stuff too. It's not just producing. So Honeywell, the ham company, probably should be even higher than it is. You could argue Honeywell should be trading at cycle highs or all-time highs, or there's, So I don't know. The whole narrative right now is that everything is so like crystal clear, like everything should be in a bull market, everything should be in a bear market. I think we're showing here pretty clear some things. And now, granted, the Dow Jones and the top 10 companies in it, like what, 7 out of the 10 look like really good. 6 out of 10, whatever. If we look at a random sample of the markets, it's not going to look like this. So it just so happens, again, that it's like the value, it's the blue chips, it's the, major index. All the money's flowing into the key areas. When do we remember this happening last time? We saw it happen in crypto when it went parabolic. We saw it happen in energy when it went parabolic. And now we're seeing it happen in, these industrials, healthcare, these staples like fine dining restaurants, the McDonald's, I believe is how you pronounce it. Mind my accent. I'm sure some of you guys do it better than me. But you get my point, hopefully. Or I'm just blabbering on to myself. I don't know. So TRV is next. Travelers companies like insurance, massive insurance provider. Retesting the highs right here. Retesting all-time highs. After consistent meltdown, new lows, broke back above. Both blue, moving averages, 200 exponentials below, but, quickly catching up right here. So, does it deserve to be at all-time highs? Is it about to literally just get wrecked and get rejected? And the important distinction to make is, why I keep talking about that is, there's a lot of stuff that's below the 200s that's at resistance that probably deserves to be there and likely will get wrecked and continue to the downside. But there's also a lot of stuff that is at resistance or previous all-time highs or whatever the situation that legitimately could, should, would be much higher. So let's take a look at the Travelers, TRV. So a year ago, it was 8.8 billion, 657 and 7.6. And now it's 9.3, 450 million and 4.83. So they saw an increase of 5 billion, 0.5 billion, sorry. They saw an increase of $500 million in revenue, and the net income went from 657 million down to 450 million. So basically got cut by like 33%. And the profit margin 7.5 down to 4.8. So does this thing deserve to be trading at all-time highs? Well, I guess if you just look at the revenue and you're like, oh, look, the revenue went from 8.8 to 9 to 8.8 to 9.1 to 9.3. That's good. But what about the net income? 657 million, 1.32 billion net, 1 billion, 547 million, 450 million. So, I mean, was there tricky accounting? Something going on here? I don't like the way this looks right here. You know, if right, let's look at, you know, obviously compared to some kind of extremes. Look right here. Revenue 9 billion, net income 1.3 billion. Revenue 9.3 million, net income 450 million. Well, I mean, why is there this much of a discrepancy? Like, did they have, you know, a random, you know, $1 billion they had to pay out for something that I didn't hear about? I mean, I don't know. Maybe they did. It was like $1 billion health insurance claim. But anyway, where are we at? All-time highs. Really? So does this one deserve to be at all-time highs? I don't fucking think so. Probably not. And then that's it for those. I have 3 other ones we're going to look at. We'll touch on crypto, and then we'll wrap it up there. I'm going to jump in the chat real quick and see how everybody's doing. All right. So Angel says, good you mentioned .com bubble. Are we going into Bitcoin bubble? What are your thoughts? I mean, didn't we already? 70,000? And now we're at 16? I mean, that's pretty hefty bubble burst, I would say. I mean, it could, maybe it already bottomed. I don't know. Probably not. But Dagoshi says, nice. Hex Evolve says, you make looking at charts fun. Thank you, dude. That's what I'm going for, man. If we can have a fine blend of both education and enjoyment, that's what it's all about, you know. And then obviously the real goal is to just get better at this stuff and then make money, you know. And if you're ever like, well, I'm already good enough and I've made enough money, by all means, man, write a book. I'll buy it because I've never had enough money, not my whole life. And I have a funny feeling I never will. Okay, so deer, another one, important one. Obviously, you know, we've been talking about essentially the importance of deer and cat. You know, because essentially Caterpillar, all the heavy industrial machinery that literally builds anything. So if we want to build stuff, Caterpillar. If we want to make food, grow stuff, deer. So very, very important. Fighting at those highs again, just had a big gap up move here at resistance, the previous all-time high. So let's check and see, does it deserve to be here? Is this about to go full blue sky breakout and go parabolic? Spoiler alert, yes. So revenue, 11.5 billion, net income 1.67, profit margin 14.46. Revenue now, 1 year later, up almost $3 billion. Net income, 1.67 billion, up another $200 million. Profit margin, 14.46, down a little bit to 13.36. I mean, does this thing deserve to be trading at the highs? Yeah, I think so. I mean, I really do. Even if it just is 14, 15 and just kind of gets its numbers in line, I mean, this thing is looking freaking juicy right now. And like, I mean, the truth is, if these companies are doing well, if these industrial companies are doing well, like Caterpillar and Deere, then, I mean, I'm telling you, the market could be wrong. They could be right. The market could be right. We're going into this bad recession and things are going to suck and blah, blah, and all this stuff. They could be right, but they could be wrong because their timing is off. And I'm telling you, people were saying we were going to be in a recession this year. By end of year, we're going to be in recession and everything. And we had a long talk a few months back, aka I, you know, talked to myself and you guys got to listen. I basically said the same thing. I said, look, there's a good possibility that this is going to turn into a massive double dip recession, but it's going to take a lot longer from the first recession to the second recession. So everybody, you remember when the yield curve inverted and everybody was like, the yield curve's inverting now, recession, da da da. And I was like, yeah, actually that matters. But the yield curve inversion is, you know, the canary in the coal mine that a recession is going to come in the next like 6 to like 18 months. So we're just now at the beginning area of when the recession could potentially start with another like 12-month lag. So, I mean, there's a possibility we're sitting here a year from now, a bunch of stuff is making new all-time highs, and we're getting ready to start a recession. And maybe the Fed did top out. Maybe they stopped hiking rates. Maybe they hike another 50, another 25, and then they pause. And then they just keep rates, at the same level for a year. And 1 year from now, companies that weren't leveraged to the gilt, weren't requiring all this money, like good industrial companies with steady cash flow, with growth that is protected from inflation, with pricing power. Like, for instance, okay, pricing power. Let's talk about Caterpillar machinery. Let's talk about John Deere tractor, okay? If I have a $250,000 machine, or $1 million machine, or a more than $1 million machine, and I'm waiting on a part that costs $5,000, and I can't get this part, which is a real thing that's been happening for the last like 2 years. I have $1 million piece of machinery that's costing me money, not only just maintenance and just sitting there, but it's not making me money because I can't operate it on my farm or dig holes or whatever I'm doing with it. So if you tell me, hey, I know you need that $5,000 part, we don't have it right now, it's going to be another 9 months. And I'm like, well, I can't do it. I can't just have this thing sitting here for another 9 months. And you say, well, I know a guy and we could maybe get you one, but it's going to cost like 3 times as much. Like, I mean, if you want it, you don't have to, but I'm just throwing it out there. You could. Like, I know it should be $5,000, but instead it's going to be 15. You don't give a shit. If you got $1 million piece of machinery, you got a $250,000 piece of machinery sitting around waiting on this part. You don't care if the part costs $5,000, $10,000, $15,000, $20,000. I'll take 2 so I have a backup to make sure this shit doesn't happen again. That's how you think when you're running an actual business that's making money and you have pieces, parts, machines, sideline. So does this company have pricing power? Yeah, fuck yeah. Does inflation matter? Fuck no. It does to some degree, but let's look at Deere here. 11.5 billion, 1.67 billion, and 14%. Oh wait, do we already look at this? So does it deserve to be at all-time highs? Yes. Yes, it does. It looks real fucking good. So Deere, blue sky breakout, new all-time highs, Fibonacci extension target to the upside. Is it time? Ding, ding, ding. Oh, yeah. 1.2236 up here at 500. We're at 437 now. 1.5 up here at 560. 1.618 is at 591. Could this fail right now? Top out, come down, close the gap, completely capitulate, double top, just melt down, and it goes to 0? Yeah, sure. Anything could happen. FTX did it, right? Anything's possible. But let's just say, for instance, okay, let's say you just can't wait any longer and you just got to buy the breakout like right now. Now, I wouldn't do that. I would try to get it right here or, whatever. Maybe it doesn't happen. But let's just say 1.236, we're talking about 18% upside. 1.5, we're talking about 33% upside. 1.618, we're talking about 42.5% upside. Does it have to happen? No. Is the risk reward pretty freaking juicy though? Yeah, I would say so. Is there a strong technical case to invest in Deere? Yes. Is there a strong fundamental case to invest in Deere? Yes. So, obviously make your own decisions, but now we're going to talk about another one. Lululemon Athletics. Ticker symbol Lulu. I think they make sweatpants that are sold at Walmart, I believe is their main shtick, okay? They may have like some fuzzy slippers and stuff too. I believe it's primarily women's apparel, but it is carried at Walmart. It's definitely like the lowest line women's apparel. But I'm not saying they don't make good quality, but that being said, a high, a low, a lower high, a lower low. Then we see a higher low right here. And then we see a higher high as well. Now we're getting ready to potentially threaten this previous high at 409. So, what are we looking at right now? We were in a downtrend. Now we're trying to flip the trend to the upside. 200 exponential and simple, both now flipping blue. And I know what you're thinking. There's no way this sweatpant company that sells stuff at Walmart is going to new all-time highs. Well, the technicals say it probably is actually. So what do the fundamentals say? Earnings coming up too. You guys know how I feel about earnings. If you don't have some kind of edge. Revenue, 1.45 billion. Net 208. Profit margin, 14%. So we went from 1.45 up to 1.87 billion. We went from net income 200 to net income 289. Wait, what? 50% in a year? What? Profit margin 14% up to 15%. So they have pricing power. We know that. They grew at 50% net income over last year. And where are they at? I mean, why aren't they at all-time highs? Why aren't they at 483? They're at 360? That's 33% just back to the all-time highs. They should be 50% higher. So, I mean, arguably they were overpriced right here. So maybe just back here is just where they should be. But, you know, if they were here and now they're 50% better fundamentally, should the price be 50% higher? I mean, maybe. I mean, I don't know. 480 plus another 50%. Slap another 240 on top. We got 720. Okay. We're at 360 right now. It's Lululemon about to do a 100% move to the upside. A 2x. I mean, it doesn't have to. It could just roll over and go to zero right now. But, you know, if you're looking for gems in a market, I mean, I think we got a couple. There's a couple little liars, a couple little dirty liars that we found today. And there's a couple little, you know, modest, like probably should be higher than they are. And I think this little sweatpants brand, this little, you know, ragamuffin sweatpants company that sells exclusively at Walmart, and that might be part of the appeal is that you can only get these mediocre products at Walmart. That could be part of the appeal. But Lululemon, I mean, what's this number going to look like? I don't know. And then finally, we want to talk about the UUP, okay? Just a way that you can it's just a bullish fund that represents the DXY. So if you want to trade the DXY, this is a way you can trade the DXY, okay? So it looks, obviously the chart looks a lot like the DXY, slightly different. Just off at 200 exponential and simple right here. Pretty heavy pullback into the bearish control zone right here, getting ready to backtest key support. When we flip over to the weekly, you know, so we're seeing signs of potential exhaustion, like short term. When we flip over to the weekly, you know, we just backtested the 821 cross to try to prevent it and then went to new lows. So I don't know now's the best time to try to play that move back to the upside because the move just happened. We just bounced up here and immediately got rejected. So I don't want to try to play another move straight back up here to 29 again. So what we're looking for is, you know, bunch of red histograms, red slope line, just flipped, hard sell signal coming out of the bullish control zone. Pretty aggressive move down here so far. So we're looking for some kind of bullish divergence on like short to medium time frames and where a potential entry would be on this to try to play this back to the upside. When we see, you know, essentially the exhaustion of the exhaustion. So the dollar was super strong and then it was exhausted and started pulling back. So then when it's exhausted from pulling back, we want to get into it when it starts being strong again. And then maybe it doesn't go to new all-time high, maybe it does, or cycle high. But regardless, we want to pay attention to that. We want to be watching this chart. I mean, obviously we can watch a DXY and when the opportunity presents itself, but worth paying attention to. So, all right. So we talked about a bunch of stuff. We made a strong case for why actually a lot of this stuff should be at all-time highs. And there's a legitimate potential possibility that at least the Dow Jones will be at new all-time highs by year end or early next year, likely, possibly, maybe. So now let's look at crypto. Bitcoin dominance. Obviously, our Bitcoin on the daily, rather, Bitstamp chart. Bitcoin's obviously wrecked right now. Crypto is just completely wrecked. We were talking about it in the group, and just imagine, you know, what would Bitcoin be at right now if this Sam Bankman-Fried meltdown, scam, CZ Binance, like, you know, weird, like love triangle, or what is it? Like what's a 10-sided thing? What is that? A hexa something or another? I don't know. I can't remember. You know hex. You're in the chat. Is hex mean 10? I can't remember. No, I can't think of it. But regardless, you know, whatever their like 10-way love triangle was, etc. If it wouldn't have been for that, will we be right here right now? No, we'd probably be at 30K or something like that. But we're not. So instead, we're down here at 16. So congratulations, Sam. Not only did you steal everyone's money and lose it, you also cost people a bunch of money on the back end as well. Now that being said, okay, we're back above the 8. We have bullish divergence. We put in a new low on price action. We have multiple green histograms come out of the bearish control zone. We have a hard buy signal. Next target to upside is back test of 21 on the daily, 17,250. If we start to build up some momentum, get a big push up, could we get up to 19K? Yeah, oh yeah, definitely. Now, am I going to get bullish if we go up to 19K? No. The move is from here to 19K to a rejection to go lower. Now, of course, we could obviously break through 19K move up to like 20, 22, 25, back test the 200s, and then maybe Bitcoin starts building some constructive, moves and continues to the upside. Right now, it still looks like trash, but short term, there's something there. The 4-hour has bull cross back to the upside. We're back testing. I don't think I have it on this chart, but I might just need to extend it. Let me just go down to the 4-hour here real quick. So this is what I'm seeing. We basically have this point right here, this point right here, and then, this was essentially that triangle that we were like squeezing into, or we were getting that big time market wedgie. And then essentially we kind of broke out of the top of the triangle, kind of went sideways, and then we just fell under support, and then we back tested the red, got above that, we back tested the blue, and now we're trying to get above that. And as long as we're above the 8 and the 21, it looks like that's likely to happen. And if it does happen, we're probably going to get a quick move, seems likely, up to like 18K. Back tested 200 exponential. 200 simple is slightly higher at 18,550. Now we are in the bullish control zone. We did just have a powerful move, hard buy coming out of the bearish control zone, 821 bull cross. It doesn't seem crazy that we could get at least like a short to midterm push back up here. And then what is this going to look like? Is this just going to look like, basically a spring where we have like a support, we start building support, we break down to a new low, and then actually we push up here, break out, go back into a new bull run? Sure, anything's possible. I mean, that's how markets develop. They show signs of something potentially happen, and then it starts to develop, and the next thing you know, it is happening, and then you start betting on it happening, and then it continues to happen, and then next thing you know, you're in a parabolic bull run, and you're all in on NFTs. I mean, not you, but, a lot of people. Way too many people. But all the right people, arguably, too, though. If you lost everything on NFTs, like, you probably deserved it. I hope you learned a lesson. I mean, nobody here would do that, obviously, because I would have chased them away a long time ago. Speaking of chasing away people a long time ago, we're going to look at a couple of shit coins today. We're about to rip through Ethereum, total market cap, Bitcoin dominance without stable coins, Chili Cheese Dog, Solana, Link, Avalanche, Dot, Matic, XRP, what? ADA, Cardano beads, and BNB. And then we're out like trout. So Ethereum on the daily, we're at key support right here. We came down to it. We did exactly what we said. Ethereum had a huge advantage going into the situation because it never came back down to the low. When Bitcoin broke back down to the lows right here, Ethereum held up like a champ. Push up here, actually touch a 200 exponential and simple. And then we talked about it in advance. I told you guys I'm shorting the 200s, expecting price action to downside. Closed my short a little too soon, whatever. Locked in the gains, that's fine. Regardless, though, of what happened, most important thing is when it breaks down, it could have that 30% drop like we were calling for without taking out the lows. So it has a huge advantage. So now we have a low here, we have a higher low here. And as long as this key Fibonacci holds, this 382, that's still juicy. Could we have held the short the whole time? Sure, but I didn't want to get squeezed out on some crazy pushback up, whatever. I'm conservative, especially in a market like this. I'm trying to just lock in those gains. So that being said, Ethereum looking pretty good. Hard buy signal. Stoch's getting ready to cross. A couple green histograms. Trying to get above, close above the 8. Trying to get up to the 21. That's a pushback to like 1,250. And then the immediate backtest target would be like 1,400. After that, we can start talking higher, but you'd be running into the 200s as well. So 1,400 seems likely on Ethereum for now. If, we can obviously maintain the little itty bitty tiny bit of bullish momentum that we have. So, everybody at the Thanksgiving table, when somebody starts talking about their favorite crypto or whatever, and you want to put them in their place, just bite your lip, okay? Because grandma might buy some crypto, and that might be the difference between your cum rocket surviving and splooging in someone's face. So, total weekly, looking pretty weak right here. I mean, damn, unintentional pun. New low, hanging out at support. The support was the previous high from the 2017-2018 peak. Basically, it's like 750 billion. Okay, 750 billion. Pathetic. Not even $1 trillion. Pathetic crypto. You're weak. Next target to downside is 535. Target back to the upside would be a back test at 200 simple. Like back to trying to get above trillion. Trillion is a big number, okay? Not just like to count to, but like it's important. I mean, it's a substantial number. It's nice and round. It's respectable. The T instead of the B. Nobody likes B's. Come on. Bitcoin dominance on the weekly. Barely holding up, okay? Barely holding up on that support line. Just hanging out at the lows. So right now what's happening is, okay, nobody wants to own more Bitcoin. Nobody wants to own less Bitcoin. Nobody wants to own more stable coins. Nobody wants to own more altcoins in relation to each other. Okay, like Sam Bankman-Fried and his little Harry Potter girlfriend and all the other retards at FTX had like their little orgy going on. Okay, we don't have that many players in this orgy. Okay, it's just 3. Okay, we just got a threesome going on. The threesome is Bitcoin, all the stable coins, well, most of the big ones, and then all the other shit coins. Okay, and they're all just going at it right now, and everybody's just like kind of giving and receiving at the same time. Nobody's winning this. Nobody's getting off on head. Nobody's, taking advantage of the situation. That's going to change at some point in time, and a trend is going to evolve, and we're going to be able to take advantage of that trend. But we have to wait and figure out what it is, because right now it's just flatlining, going sideways, nothing changing. Something's going to change that, and when it does, it's going to be big and volatile. Now, if we take out those stable coins and we look at it, we see Bitcoin is slowly gaining back a little bit of strength compared to the altcoins. So people are gaining a little bit more faith in Bitcoin or losing a little bit of faith in the altcoins. That's what we see from this chart. So very important to see. But obviously, macro, I mean, look at Bitcoin compared to, altcoins, stable coins. I mean, it's damn near the lowest it's ever been. It is almost the lowest it's ever been when you take out those stable coins. All right, so Chili Cheese Dog. So it did lose the 200 exponential, holding support above the 200 simple. It's okay for now, as long as we're between the 200 exponential and simple, though. Basically range bound between 16.7 cents and 20 cents, essentially. So 16.5 to 20 cents, chopping around sideways. We'll see what happens from there. No crazy divergence, no crazy indication as to which way it's going to go. So far, it's trying to maintain. When you break above the 200 exponential and simple, you want to see higher lows and people buying it further off, and then it start going up. That's not what we're seeing right here. So that's not necessarily a good thing, but it's not necessarily a bad thing either, because we're basically just putting in higher highs and lower lows. So we're basically, we're basically dyslexic. Wait, is that only with words, or can you be dyslexic with colors too? I feel like there's a different word for it, but whatever the dyslexic with colors is, that's what I just did. So support here in green, lower lows consistently, resistance here in red, higher highs consistently. So we have a megaphone pattern. It could break out in either direction. The most important thing is obviously orientation compared to the 200 simple and exponential. If we're on top of those, it seems more likely we're going to break up. If we're below them, it seems more likely we're going to break down. So we'll see where the pressure comes in at and which way the break comes. Solana had a nice little bounce off the lows here. Was putting in lower lows, bunch of green histograms, hard buy coming out of the bearish control zone. So if you got out up here at 30, you can basically buy back twice as much right now for the same price. I'm not saying you should. Obviously, Solana's trash. It's a garbage project. But it does not mean that it's not setting up, for a face ripper rally, 18% or maybe even 72% back to the upside. I don't know. It's probably going to go to 0, but just throwing it out there, okay? Chainlink is next on the daily. So we did technically put in a new close low right here, but not a wick low right here. It's probably different on different exchanges. But just hanging out at the lows, had a nice little bounce. It did touch its 200 exponential and simple, which a lot of things did not. So that is definitely a good. And it looks like it's trying to fight to get back up here one more time to the 200 simple. 200 exponential is at like 860. So big move if it does decide it wants to get up there. Now I don't, obviously know what's going to happen here, but 25%, indication that this thing's ready to pop up. And we're seeing that across the board. Hard buy signal coming out of bearish control zone, couple green histograms. What's the next shit going? This one is avalanche, AVAX, okay? Just put in new cycle lows, recapture the 8, likely to test the 21. That was the previous low from back here as well. So we would expect that to act as resistance. If it decides it's going to come up here and get to 200s, we could be talking about like $18, 50% move to the upside. Polkadot got this descending channel well below the 200s. We talked about the potential to come back up here, threaten the channel, and then a breakout measured move from the bottom of the channel to the top. Obviously, we have a bunch of resistance along the way. So the same way we do the slinky theory on the way down, we would have like reverse slinky theory on the way up, aka just like walking upstairs. Or if you're lazy, maybe it's just an escalator and you just kind of hang out. I think that's probably more appropriate for a current investor. It's like, just take the escalator. It's a little slower, but it's consistent. So where does this thing go if it decides to pop up? I mean, again, I'm not expecting it. I'm not planning for it right now, but we could see crypto start strengthening and seeing like some quick 20, 30, 50% moves. Still very, very bearish. Still looks like trash, but on thematic, again, consolidating between the 200 exponential and simple. As long as it's between the two, we're basically range bound, and the range is essentially the same as the 382 and the 0.5. So I'm expecting this to stay between like 73 cents and 95 cents. A break in either direction probably takes us to the corresponding next fib. The 236 at 52.5 cents, or the 618 reclaiming this ascending support line, threatening the ascending resistance line, buck 22. And if we get up there, I mean, that's just basically, again, this thing could really run 1.75. It's almost 100% move. And at that point in time, we're back at the 786, and then we might as well be at all-time highs. And so who knows? Maybe the Fed's going to pivot and just start printing again. I mean, but also there's like 3 good cryptos, like chart-wise, and the rest are trash. We just happen to have looked at 2 of them. XRP, speaking of good cryptos, we'll look at XRP and then good cryptos after. So XRP, pretty rough here. It's not putting in a new low. I mean, that's a good sign. It's basically ascending support right here, slowly just putting in higher lows, hanging out. Is the floor about to fall out of this thing? I don't know. Yeah, probably goes to 0. It's trash. It's a cult for sure. But it is retesting the 200 only because it's so beat down and just such trash. But if it does break above this 39 cents area, we should see 45. So, I mean, we could be getting ready, for about a 40% move up here. Something like that. Just to retest resistance before it goes much, much lower. Probably to 0. ADA, not going to make any Cardano beads jokes or anything. Okay. It's a respectable cryptocurrency. Charles is a good developer. And, I shouldn't make fun of him, even though he is a nerdy little bitch. So Cardano, absolutely wrecked. 31 cents. $3, I was telling everybody how trashy this crypto is and how it was going to get wrecked. And now it's down 90%. And something like crazy, like 60% of it is staked. So I'm like, you're so stupid that you literally took your principal and you were like, hey, I'll loan you this $100 if you'll give me $8 back. And I'm like, oh, okay, yeah, sure. And then I just like give you $4 after 6 months. And then eventually you unstake it. And now your Cardano, instead of being worth $100, is worth 10. But you got that $4 in interest. So you have $14 now instead of your 100 though. So you lost 86%. So congratulations. Congratulations, Cardano. You're a genius. And you're like, yeah, but I bought my Cardano at 20 cents. So I don't care if it went all the way up and then came all the way back down. I'm still up 50%. Okay. Well, if that was true in hindsight, if you could go back and sell it at $3, would you? Yes. Okay, I'm right. You're wrong. Hypothetical person that I'm not even talking to. So yeah, Cardano is still trash. So really, really bad trash. Looks like it wants to go to 23 cents. And you're like, well, isn't there some kind of bull case? I guess, man. I don't like lying to you guys, so. But in a hypothetical world where someone decides they want to join the Cardano cult and buys enough that the price actually goes up instead of down, Cardano could retest 42 cents. You're welcome. It's like 33% move. Okay, it's not bad. All right, so BNB. What did I do? Bring up the wrong one? This is the old BNB chart? Whatever. So we got Binance Coin. We talked about this. There's 2 very important levels, depending on which of my charts you look at. One is this low right here. The other is this low right here. We're trying to hang on to this low. We're back below the 200s. You guys know if we come down here, I mean, if we break down from 300, the next support is 200, 210. And if we break down from 210, we go straight to 40 overnight, $40. Okay, not 40 multiplied by something. 40, just that's it. That's the whole number. So yeah, I mean, there's some slinky theory in action, some steps along the way, but I'm telling you, this thing is way dangerously close to imploding. And you're like, crypto's not going to implode. Things are fine. And I'm like, well, FTX just imploded. There's like all these other like big companies going under, massive investment funds, like so much like damage that we don't even know about. We're still going to be hearing about for 6 months, 9 months, a year into the future. Stuff's still going to be imploding. halting withdrawals, all that good stuff. Tether losing its peg to the dollar. I mean, let's not rule out that Binance could also take a spell here. I'm not saying it has to happen, but what typically is the catalyst for the big meltdown? Well, let's see. You incentivize. Tell me if this sounds familiar at all, okay? And then afterwards you can be like, well, he copied off him and that's why it sounds familiar. So shut up. It's not a scam at all. But let's just say hypothetically, you listen to me first and then you can make your own decision. So let's say, for instance, I make an exchange, okay? And then on that exchange, people trade and I take fees or whatever. And then I'm like, I'm going to broaden the horizons. So what I'm going to do is I'm going to create my own cryptocurrency and it's going to be a utility token, okay? And if you hold a certain amount of that utility token, I'll give you a discount on your fees. So if you are going to be paying fees anyway, you might as well just hold a little bit of this crypto. It's pretty good. It's been going up for a while and everything. And then for holding that crypto, you pay less fees and everybody wins. Does that sound at all familiar? And you're like, yeah, that's what Binance does. Of course it sounds familiar. Duh, and it's working great. Look how great the company's doing. Well, it's also what FTX was doing. It's literally the same thing. So what was the catalyst? And you're like, it was CZ being mean. He's the one who crashed FTX. Sam's a good guy, and he was fine, and things were fine. Everything was fine. And Almeida was fine. They may have misappropriated funds and lost $10 billion, but it was right about to turn it around until mean CZ blew them up. Okay, sure. But what was the actual catalyst? They were holding a bunch of FTT, their own token. So they created a Ponzi scheme based on an actual trading business, and then it got a bunch of people into the Ponzi scheme, and then eventually one of the people with large stakes in their Ponzi scheme coin got a little worried because they're like, if you ever met Sam Bankman-Fried, a normal person doesn't look at him and say, this looks like a successful man that will make billions. I'm like, this guy just crawled out of his mom's basement, probably masturbated 3 times today, and is half retarded. But, I mean, what do I know? So that being said, could we see a similar catalyst happen to Binance, where Binance coin breaks down from key levels? Suddenly Binance, who has been maybe just buying up a bunch of Binance coin to kind of prop the price up because they don't want it to fall, and they have slowly become a bigger and bigger holder of their own coin, and they can't just dump it onto the markets because then that would create, way too much liquidity and the price would fall because there would be too many sellers and not enough buyers. So now they're in this weird trap where they have to keep buying up their own coin, putting themselves further into risk. And you're like, that's not true because Binance got audited and we saw their balance sheet. No, we didn't, because they don't want to show us what they have backing all this stuff. And, they're this massive billion-dollar player in the crypto market, and they supposedly hold all these, mortgage-backed securities and, treasury bonds and all this, like, good commercial paper. But, like, there's only so many people, so many institutions, so many buyers of, like, in the, like, hundreds of millions and billions and tens of billions of dollars. So like you would think somebody would be like, oh yeah, I've dealt with Binance before. Yeah, they bought a few $1 billion worth of this, that, and the other from there's no one? There's no one in all the world that says that? Oh, okay. So maybe they're lying? I don't know. We'll see. I could be completely wrong. And Binance Coin's actually amazing. And this is not going to happen at all. But also, timestamp this shit. Because, just wait. Just in case. All right, so we ripped through a bunch of stuff. I told you guys my conspiracy theory. We talked about the divergence in the markets, why some stuff is going up, why it's probably going to keep going up, why some things should probably not be as high as they are. Broke down the theory, the potential pivot, where we could see essentially like directional changes in the market, aka the next energy trade, so we could get positioned in advance, or at least to capitalize on this. Yeah, I think it was a pretty good stream. How we do on time? An hour and 44 minutes? Okay, that's not bad. A little longer than we've been going lately, but I don't mind it. Prague, I'm about to wrap up right now, man. Baba, man, there's nothing really changed with any of the Chinese stocks. I mean, they had some nice moves or whatever, but they're all basically like at or around resistance, like trying to do something. But again, you got to be real careful with the fundamentals over there too, because now like China's going back into mad lockdowns, and I have no real interest in China right now, just because there's just too much headwinds. Like literally anything could just flip, and all of a sudden you end up like in a Russia situation where you have a bunch of money tied up in Chinese stocks and you can't even access it because, you know, now we're at war with China because they bombed Taiwan or some crazy situation like that. Or maybe just everything keeps going down because, I mean, there's a legitimate problem in China right now. The problem is their vaccines don't work. And you're like, no, vaccines work. Well, whatever. They do some stuff, obviously. Either natural immunity or vaccines or a combination of the two. Whatever. I'm not a doctor. You believe whatever you want. No conspiracy theory here. But they have a vaccine that doesn't work. And they don't have anywhere near natural immunity because they lock down anytime anybody shows any symptoms or anything. So at some point in time, they need an actual vaccine that works, or a bunch of people got to get sick and they got to get natural immunity. So like everybody else, I mean, it's so weird. You see like the World Cup on one channel and then you see China still in lockdowns on another. And it's like, how is there like two completely different worlds right here? And how does China ever get back to being on par with the rest of the world? And honestly, like a cure, a vaccine, or natural immunity. That's the only way I see them like getting back to normal. So and I mean, the longer the government's dragging on, the longer Xi's out here doing his thing and, you know, trying to do this whole like, you know, communist control, whatever. He's obviously making poor decisions because the rest of the world has been through it, had some deaths, and now it's moving on. They're still stuck. So at some point in time, the people are going to get so mad that, you know, he's going to get overthrown or, you know, whatever, quote unquote, voted out. Obviously, that's not a thing. But you know what I mean. So something has to actually happen in China, like fundamentally, in my opinion, for things to change. And you're like, well, the market's forward looking, so maybe they're going to price in 6 months in advance. I definitely could see that. It's definitely true. But I don't see any actual signs. I just see another dead cat bounce. So, and you're like, well, you could have just pulled up the chart if we were going to talk about it for 10 minutes. Damn. But yeah, all right, I'm out of here. So appreciate everybody tuning in today. Hopefully everybody enjoyed the stream, had some fun. Happy Thanksgiving. Everybody have a wonderful night. Prague, if you remind me at the beginning of next stream on Friday, I will look at those for you. So, but yeah, appreciate everybody tuning in. Obviously, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Let's just keep an open mind here. It's okay to be wrong as long as you can admit it and get on the other side of it. So, you know, it's okay to be bearish right up until, but when the charts flip and tell us we should be bullish now, and then we look at the fundamentals and we say, oh, this company's making billions more. Their, you know, profits at all-time highs. Their margins are looking good. Should they be at all-time highs? I would say yes. And, you know, rates are a thing. Tightening's a thing. Recessions are a thing. But they're not going to hit every sector the same way, too. So it's worth paying attention to. But that's it. We're going to go ahead and wrap it up there. Happy Thanksgiving to everybody. It is 9:50 p.m. Eastern Standard Time on 11/23/2022. And as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That's it for tonight. Crypto Trend Trader.